The full stochastic is a technical momentum indicator developed for MT4 platforms. It generates crossovers and overbought/oversold signals for identifying potential trend following buy-sell opportunities. Unlike general stochastic oscillators, this indicator is more steady in highly volatile markets. It delivers accurate momentum signals during choppy and sideline market conditions. Forex and stock traders apply stochastics to determine the possible trend reversal points. It helps them to verify the potential price swing positions in trend-following markets. Also, you can examine the strength of a price breakout using its super momentum signals. The full stochastic indicator determines market highs and lows using a slow K line, signal line. At the same time, it identifies bullish/bearish market momentums applying crossovers between %K and %D. So, the idea is to combine momentum and overbought/oversold signals with adding more confirmations to your buy-sell entry. Furthermore, it suits MTF charts and works equally well in all time frames. Read through this tutorial guide to learn more about how to trade using the full stochastic indicator in MT4. How to use the full stochastic MT4 indicator for identifying potential buy-sell signals. The full stochastic uses the slow K line in gray color to signal the OB/OS market. Its value hits 80 during an overbought market and drops near 20 to signal an oversold condition. Besides, the K blue and D red lines give you an overview of the current trend condition by plotting crossover signals. The K line exceeding D indicates bullish momentum. Conversely, the K line declines below the D line when the momentum turns bearish. Before placing buy orders, look for a bullish crossover between K and D, then wait until the slow K line hits below 20, oversold zone. Next, look for a price action signal confirming a bullish breakout at resistance or rejection at support. Consider a buy exit right after the slow K line hits the overbought level, 80. Alternatively, hold the long position until the K and D lines plot a bearish crossover for intraday/long-term trading. We'll look for sell opportunities when the indicator simultaneously confirms an overbought price and a bearish market momentum. The above Euros chart shows a selling opportunity following a bearish price breakout at the support 1.0625. During the breakout, the K and D lines plotted a bearish crossover. At the same time, the slow K line was declining from the overbought zone, confirming the sell entry. Wait for the M15 stick crossing signal, indicated by a fractal symbol. This is just a symbol and not a fractal indicator. You can see that it is in lime color and pointing up. 2. The HMA4 must be in the same direction as the stick crossing below it. It becomes Dodger blue in color. 3. There must be a minimum of 3 MTF stochastic oscillators, the M15 along with any two of the M30, H1 and H4 time frames, in the same direction with 0.1. 4. The Williams % range indicator must be close to and below the -10 line. If it is above the -10 line, wait for it to close below the -10 line. 5. If all conditions above are met, then enter the trade at the closing price of the current bar or the opening price of the next bar. 6. Place the stop loss 40 pips away from the entry price. 7. I place a take profit sometimes, usually when I can't monitor the price movement. When I need to leave the monitor, I use the daily pivot support/resistance line to determine this level. 8. Exit the trade if the WPR comes to the overbought zone which is above the -10 level. 9. Exit the trade if the M15 stochastic has crossed into the overbought area, above the 10 level, and ready to cross back down. Exit at the pivot daily support/resistance line. Sell opposite conditions in the picture stochastic MTF Forex system in action. Stochastic oscillator is a momentum indicator. Traders have been using stochastic for over a half a century, and even so, it is still very popular. Being a momentum indicator, stochastic is useful to understand if a trend is exhausting. Stochastic is the result of the comparison of the price over a specific period of time. The value of the indicator fluctuates between 0 and 100. Stochastic indicator's graph includes two lines. Main line, which is the value of the indicator calculated with the formula presented below. Signal line, which is the moving average of the main line on a specified period. It helps in smoothing the changes. Stochastic oscillator formula. The mathematical formula for the stochastic oscillator is %K equals C, Lx, Hx, Lx, x100, where C is the close price, Lx is the lowest price in the previous X candles, Hx is the highest price in the previous X candles. %K is the stochastic's value of. How to use stochastic oscillator. As mentioned earlier, the stochastic value is ranging between 0 and 100. Stochastic includes the main and the signal lines. When studying this indicator, you usually consider stochastic above 80 means that the price is overbought, so it will probably retrace or consolidate. Stochastic below 20 means that the price is oversold, so it will probably rise or consolidate. When the main line crosses the signal line, upwards or downwards, there is probably a change in the trend. While those are common behavior traits, there are also exceptions with this oscillator. In fact, not always a line cross would mean that the price will change its direction.